exceptional. It's incredible. I mean, it's phenomenal to be able to do that inside of 2 weeks, to go from 36 grand to 110 grand. That's what I call winning in this game. Welcome to another episode of What's Wrong with This Insurance Estimate. This is episode number 8, and I'm going to start this episode like I start all the rest, with a question. And that is, are you just taking the insurance adjuster's word for it? Like, is that how you're running your business? Are you a contractor who works on insurance restoration projects and you're doing the job for whatever the adjuster says that you should do the job for? That's crazy. And that's what this series is all about, is to try to put an end to that. What's wrong with this insurance estimate? Episode number 8. What we do is we cover a real insurance project, and we start with the original insurance adjuster estimate, and then we go through the steps of what we actually did from there to achieve the desired result. So in this case, it's a little bit different from all of the rest. And on the other episodes, and if you haven't watched those episodes, please do go back. They've been going on now for a couple of years, starting with episode 1 through 7. This is episode number 8, and we're going to keep churning out many more episodes going forward. But the ones in the past, what we've typically done was we showed you the original insurance estimate, and then we went right in and showed you the estimate that we submitted to the insurance company from there, followed up with showing you the eventual revised insurance estimate. So basically a 3-step process there. And on a couple of those, we had to go, through a couple rounds, more than one round. On the last episode, it was a little bit different because we took you into the project and showed you actual photos of the project in episode number 7. And we're going to do a lot of that again in this episode. We're going to go through and show you this job. This project is in Panama City, and it's a result of Hurricane Michael. And I got to say, I've seen 11 hurricanes. Like, I've worked in the aftermath of 11. This was number 11 for me. And for me personally, this was the most devastating hurricane that I've ever seen as far as the damage that it left behind. But in this case, our strategy was a little bit different. And if you learn anything from my training course, and quick plug on that, it's the IES certified training course at iescertified.com. And the IES basically stands for Inspections, Estimates, and Supplements. And in that course, we talk about using different strategies for different situations. So like, basically no two insurance projects are the same. Every one is unique. And so you really need to follow a series of steps and a process on each one of them, but your paths might change depending on what the insurance company is doing to you. So in essence, you want to try to be a counterpuncher and respond and act based on what the insurance company is showing to you. So out of a reaction to what they're giving to you. And so in this particular case, instead of immediately submitting an Xactimate estimate into USAA, we took a little bit different track. So from what we could see on the job, like when we went and did the initial inspection, the thing that I could see right away is that whoever did this initial inspection with USAA, and it looks like they sent out an independent adjuster, whoever did that inspection really rushed it. And I've seen a lot of that. In fact, most of the jobs after Hurricane Michael and in the aftermath of many other similar storms, what you tend to see is, the game for these adjusters, really the objective that they end up learning as they go out on an assignment, like a big cat loss like this, the thing that they end up learning is that for them personally, the objective is speed. It's not getting everything correct and being thorough, it's speed. And if you can imagine, the insurance companies have to have adjusters out on those initial inspections after a claim is filed. And in most states, there's statutory revisions by law. They have to be there within so many days, and so on and so on. And if you learn anything from these episodes of my series, I don't get into policy and coverage too much because I don't use policy and coverage to do anything that I do. I'm a damage expert consultant. I'm not a public adjuster. I work for contractors doing inspections, estimates, and supplements, mostly in the estimating capacity. So everything that I do and everything in the course is how to win with these projects by exhausting all options that are at the contractor level without ever getting outside of that lane by venturing into policy and or coverage. And if you know anything about Florida, you really can't get into policy and coverage in Florida. Man, there's very strict laws and regulations against that kind of activity. So you have to really be careful in Florida and in a lot of states. But in this particular case, like in all cases, we don't have to use policy and or coverage. So, but getting back to what I was saying, the objective for adjusters is speed. They have to get there and close out these files in a certain amount of time period. And for brand new adjusters, so if you're someone that's listening to this and you're setting down that path to become an adjuster, an independent adjuster, I think in most cases, one of the things that you'll find out, and I'm not an adjuster, it's just a thing that I've learned from being in the industry and friends and contacts and colleagues. The thing that I've learned is for most brand new adjusters, they're very optimistic about getting into the business and they feel like they can make a ton of money. And once they get in it, they've learned quickly that the real way to break into the business is to go and work on a cat storm. Okay, and that's really, like, you're not going to get into the business and immediately become an inside adjuster with State Farm or anything like that. I mean, it's not typical. It's not what I hear of. You've got to have the experience of going out and working on a cat storm. And then, for new adjusters or prospective adjusters are thinking, well, man, I can get paid based on the scale and the size of the job. That sounds like a great deal. I could get, commissioned down to a place like Hurricane Michael and write up a ton of estimates and close them out and, make a bunch of money. And so they go down there and, when that finally does occur and they've got themselves all set up, and typically they have to fund themselves, as far as, putting their hotel and gas and their own vehicle and things and flights on credit cards and things, or using their own money, because it takes a while for the payments to start to come in. And the payments don't come in until payments are made to the insured. So like the estimate was written up by an adjuster along with a ton of other paperwork and photos, etc., and it was approved by whoever they're working for and submitted to the carrier and approved by the carrier, payment made to the insured. After that fact is typically when a payment's going to be made to an adjuster. So a new adjuster going out to these storms, they're doing the inspections and doing estimates like they were taught and trying to be thorough and doing them correctly, only to find out that these estimates get kicked back down because they included way too many items on the estimate. We don't give them overhead and profit. We don't give them the removal items. We don't give them this. We don't give them that. Redo that, right? And so they're thinking that they're making all this money, and then this estimate gets kicked back down. This estimate gets kicked back down. This claim doesn't close. This claim doesn't close, and they find out very quickly that this isn't going to work, and they've got to change up the way that they're doing things. And I'm not saying these people are bad ever. Like, I never assume that these adjusters are bad people or they have bad intentions. I actually think quite the opposite. I think that if they can justify the damage, they'd be happy to pay for it. They meet these people. I think that they have empathy, generally speaking. Now, of course, all of you watching this definitely know that there are many exceptions to that, but I'm going to give them the benefit of the doubt. When I first encounter an adjuster, I just assume that they're willing to pay for it, but maybe they're bound by restrictions. Maybe they're bound by these heavy, whoever they're working for, the interior unit that they may be working for, might at the independent adjusting firm might have strict criteria about what they can and can't approve. Like overhead and profit, I see a lot of times where a job definitely calls for overhead and profit, but they don't include it. and all you have to do is ask for it, and they easily give it. But it's not there, not because the adjuster didn't want to give it, but because that was like an internal policy that they're using, like a standard operating procedure that they're using. And so I think that more than anything is, it's not that they're bad people, it's just that there's a lot of other factors happening in the background, right? And so in this particular case, down in Hurricane Michael, the damage was so extensive, but I think that the emergency was so great that they were under mandates just to get money out there. And I've heard adjusters say, we've been told not to worry about it if we miss anything. They have a procedure in place for that. It's a supplemental process, and they know that somebody else is going to clean up their mess. So what you see is a whole bunch of adjusters get dispatched to an area like this, even before the storm's there, and they're in a big hurry to make that initial inspection. And then after that, here's the other bad thing about adjusters, just to caution you, sorry to bust anybody's bubble out there, is that, going back to that scenario, you think you're gonna make a whole bunch of money, you're knocking out estimates and doing a great job, and then they start getting kicked back, and then you find out that the best thing you can do, because now you're not getting paid, like you're starting to freak out. And so now you start to speed through these because you realize that the best thing to do is to send them through with absolutely no questions on them so that they'll get paid, and that they'll get paid quickly. And now you're like, okay, so I can get to this many, different claims. And just when you're kind of getting into the rhythm and you're figuring out how things are and you're up to speed, if this is your first assignment like that, then all of a sudden, guess what happens? You're cut. And why is that? Because again, they have to get out there and make first payment to all these claims. But after that happens, which happens very quickly, then what? Like, the only thing happening after that is supplemental stuff, re-inspects, and people that, are, fighting back or contacting their insurance company and saying, hey, this isn't enough. I can't find a contractor to do it for this amount. And so only the more seasoned and experienced adjusters are left behind for those re-inspect roles, which is also a good thing to note that, if you send an estimate to an insurance company after an initial inspection was already done and it was short, and they assign the claim for a re-inspect and they send a new adjuster out there to have another look at it, you can be assured that most of the time that adjuster should be a bit more experienced and a bit more seasoned, and hopefully will be, it's a higher likelihood that they'll do the right thing. But in this particular case, the estimate was so far off that our first step wasn't sending the complete estimate. Instead, we sent a complete photo report, which I'll show you. It's in the Xactimate format with the Xactimate cover letter. But it only has photos on it. That's it, right? It doesn't have any line items whatsoever. But what we're doing is we're showing, the inside team or inside desk adjuster, whoever's going to review this file, we're showing them what it really looks like out there, because they can take that and then compare it side by side to the photos that was taken by the adjuster who wrote the initial report. And we'll all just have to assume we don't know what those photos look like, because they're typically not included in the adjuster report. Sometimes they are, but they are included internally. So in other words, USAA is going to be able to look at not only your photos, but the photos that was submitted by the initial adjuster. Pull those up side by side, and now they can have a second look at this, put a little more scrutiny into this, and see what's really going on. And so that's what we did with this. We sent the photo report to show them that there was so many, items that were missing from this, and I'll explain, sort of how we did that. But then from there, USAA said, okay, great, send us an estimate. Then we sent the estimate, then they signed it for a re-inspect. Now, you never really know what they're gonna do. So sometimes when you send the photo report, sometimes they'll just revise their estimate internally based on that photo report. Or sometimes they'll, based on that photo report, right then and there, they'll assign the job for a re-inspect. So they'll send out a new adjuster right at that point. And that's, by the way, why we did not send them the Xactimate with the photos. We sent them the photos first, in case they went that route. But in this case, they didn't. They made us go ahead and send them an estimate with the same photos, and we did that next. And they could have just approved the line items from right there. They had enough data to do so, but in this case, they didn't. They assigned it for a re-inspect. And whenever a re-inspect occurs, especially with USAA, that new adjuster that's going to come out there is going to have an assignment, and they're tasked with writing their own estimate on the job, unless they're willing to accept an ESX file from us, an Xactimate data file, which is basically where they can take our estimate, plug it into their Xactimate system, make some changes here and there to it on their end, and actually modify our estimate and put their own letterhead on it and basically get the credit for our work. And in this particular case, that's what happened. So let me walk you through each and every step. Like I said, it's a USAA claim out of Panama City from Hurricane Michael, wind damage. You can see on the cover page here, just basically, USAA, one thing to note, they go by member numbers and policy numbers. So like, actually the policy number is typically the same as the member number, and then they add a 3-digit LR number to the end of the member number, and that's technically the claim number. That's what they use internally for the claim number. So if you want to, be able to find the claim number, that's what it is. It's typically the member number slash, like this slash right here, and then a 3-digit code right here. So here it's showing what the coverage is on this property. It's showing that the dwelling is 345, the contents is an additional 258, the other structures, so that would be like unattached garage, fence, shed, things like that. The coverage is 34.5, loss of use 69,000, and the deductible is 69,000. So that would be, if you add it up, about 2% of the policy limits. Yeah, they're pretty high down there in Florida. If you want to live down there on the water or anywhere near the water, expect high premiums and high deductibles. Not fun, right? So anyway, going down, this is the price list that was used on the original estimate, which was the October 8th price list. That's something that you want to look at too, is why is the adjuster, let's just think about that. Why is the adjuster using the price list that from the same month of when it occurred? Right? And if you just go on up, look at this. This thing was printed and sent out on 11/19. That's ridiculous, right? Now, why is that ridiculous? Because the price list that was used, that's the price list that was issued, and it came out at the very beginning of October. So you see, the date of loss is the 10th of October. There was already an October price list in place. A new price list comes out in November and December and January and every month thereafter. And that price list is specific to the Panama City area. So that Panama City price list is going to be different than the price list in Orlando, and different from the price list in Miami, and so on and so forth, right? That's how, if you don't know, the Xactimate price lists are structured. They come out every month, and they're market specific, okay? And those price lists change based on the market and the market conditions, right? So supply and demand, lumber and shingles are petroleum based, so we have commodities going on here, with the stock market. As prices go up and down, it affects the price of building materials. If you heard about, like tariffs on certain things, aluminum and things, all of that affects steel, affects what we're doing, it affects those price lists. But what affects the price list more than anything is a catastrophe, okay? So when Hurricane Michael occurred on the 10th, that just jacked the whole market up. Like, everything went through the roof. The supply was non-existent, right? So, to get materials, the prices on those materials went up significantly almost overnight. And even more so on labor, because there was a significant shortage of local labor, and labor had to come in from other parts of the country. And another challenge about Panama City is because of the extent of the damage and the kind of narrow locale that it is, there's only so many ways in and out. There's not a lot of places to stay. Like, honestly, the hotels, most of those are damaged. So there's not a lot of places to stay. And then you have, like FEMA and power line workers and contractors coming into the town. Forget about it. There are adjusters. There's nowhere to stay. So to get a place to stay, you basically have to get a place like in Destin, or maybe even as far as Pensacola. So you're talking between an hour and a half to 2.5 hour drive back and forth every single day to go to work. And that's what people are doing all up and down the coast, even now, about almost exactly 4 months after the fact. So, just there a couple weeks ago, and was blown away by how much debris is still left on the sides of the road. And I mean, it's just, the place is a mess. You can barely drive. The traffic is a standstill because there's way too many people and too many vehicles that were, more than what were meant for the town. And so it's very difficult to work. The prices for labor shot through the roof. So did materials. So I want to give you a very valuable nugget right right at this point of the episode, is that price list right there is very, very important. I mean, you could take this estimate essentially and send an email to the insurance company and just ask them, like, if you just got involved at this point many months later, and just like, let's say you're just working for the total of the insurance estimate. I told you that's ridiculous. Like, stop doing that. That's crazy. Like, if you're not going to do any other work, at the very least, contact USAA and simply just ask them as a courtesy to reprice the estimate to where it's currently meant to be. So in other words, ask them to reprice it to the current price list. And I guarantee you, they're going to do that for you. As long as the work hasn't been completed yet, like, they're going to do that. Think of replacement cost value. They pay the cost of what it costs to build a brand new roof today, not what it was before, right? So it's not what it cost at the time of the storm. Oh no, it's replacement cost value. So that price list right here is so very crucial and important to you. And I want you to know that right in the beginning. So look at that right away, and let's see, what is it priced with, right? So in this case, we know it's all wrong, right? And let's look at the summary for the dwelling. Now, dwelling, you can see, one thing I always look for, they've included overhead and profit. Good deal, right? Because they should have. This is a significant, extensive job, but you never know. They took off the deductible, and the net claim is $24,76742. All right, and let's just kind of browse through this insurance estimate a little bit. And this next page is for the other structures, fencing, etc. And going on down, a little recap on the O&P. Moving on down. Okay, now the front elevations, we've got some siding. And the one thing that I want you to pay attention to is that they've got two different kinds of siding on this house, okay? They've got lap siding and shingle type panel. Now they're using a little bit of the wrong stuff on those items, which we'll correct on our estimate eventually. But way more important than that is that they've only got 8.5 square feet of the lap siding on the entire front elevation of this house. You're gonna see how ridiculous that is when you see the photos. And then for the shingle type panel, siding, they've got 64 square feet. So it's basically an 8x8 section, essentially. And that's just really ridiculous. You can see that they're saying that the entire front elevation, at least according to these two items here, should be 1235. Now, that's the other problem, though, is that they were off on much of their measurements on this entire job. But that's all they've included on the front elevation, is a little bit of lap siding, some downspouts and gutter, a little bit of fascia, a little bit of the shingle type siding, a little bit of pressure washing, exterior paint, one coat. They've decided to replace the front door, and they're going to give us a little bit of wrap around the garage door. Okay, so that remember that garage door. So and exterior door. So the front door area and the garage area, they're saying is part of the front elevation, but only this much siding on the front elevation they've agreed to replace. Okay, we'll look at the photos here in a moment, but just humor me for a moment. Right elevation, much of the same, 60 square feet of the lap siding. Oh, they're going to give us a little bit of OSB for sheathing, one sheet I see. They're going to give us a little bit of house wrap and some pressure cleaning. They're saying that the whole right elevation is 832 square feet. We'll move on down. We've got the rear elevation, a little bit of fascia, and no siding back there. We don't get to have siding back there. We're just going to get a little pressure washing and some painting, but that's about it. Left elevation, much of the same. We got some house wrap, little bit of siding here. just for the lap siding, none for the other type. A little bit of soffit here, a little bit of pressure washing, and one thing to note, left elevation, 832 square feet, and then you go look at the right elevation, 832 square feet. So like I said, they're off on the measurements, and that's a good indicator of it, that they think that the right elevation must be exactly the same as the left elevation. That's just ridiculous. That's a good indicator of an adjuster that just ran around this house and didn't want to question the siding, right? For fear that the higher-ups might kick it back down and he's not going to get paid. And I got to say, I say adjusters aren't bad people, and I've given him some leeway and some latitude here, to try to give some explanation as to why this estimate might look like this. But in this particular case, after having met the actual homeowners that live there and just see what great people they are, sweet family, this adjuster ought to be ashamed of himself, especially given that after the estimate was written, the homeowner contacted him and he came out then with his manager to have another look at it. And at that meeting, the manager and the inside adjuster assured the homeowners that they were going to revise it and that they were going to include interior work that was missing. And guess what? They never did that. So they broke their word, and you can only imagine, based on what I said earlier, they were cut. They were sent back home, and they didn't care about it anymore because at that point it was somebody else's problem. And so when I hear a story like that, I'm thinking to myself, what really happened? And then when I can think about it, what really happened, then the end result is that USAA is not trying to screw over these great people. I guarantee you that's not the case. But people, when you have humans involved, we're all human, we make mistakes, and if you can just see all the other factors that were involved in these adjusters fighting through that traffic, and oh my goodness, it's maddening having been in it and trying to keep track of all these details and having higher-ups on your tails and people are blowing up your phone, crying about what they're going through. I mean, so, giving him some leeway here. But on the other hand, for this one, he ought to be ashamed of himself. Okay, so now on the roof on this particular job, the roof was already done by another contractor prior to my involvement. So I was working for a contractor, general contractor, and when he got the job and signed this client, there had already been a roofing contractor there and gone. And that was another sad experience that they went through because they just agreed to whatever the contractor said. And I think it was like $28,000. And as you can see here, the insurance company only paid like $19,200. And so, of course, those prices are able to be pumped up again, with the price changes and things like that. And, this is an item to look for here on Florida claims. They all have to be re-nailed, the deck. And you see, like, he did get that. A lot of the items that they mostly, I saw were missing down there, he did get. But then again, there are a whole lot of other items that were missing on the roof. But for me, when I received this, again, the roof is like, I kind of have to keep my nose out of that, right? Because that has been handled by another roofing contractor who's already been in contact with USAA, and they're going to kind of have to hash that out on their own. But what I can do is make sure that the rest of the job is done correctly, and I could do my best to make sure that USAA deals with some of these other items here. So now, other structures, you can see that they've got wood fence treated. It was basically completely missing. We've got 3106 here. What does that bracket mean, this bracket right here in the depreciation column, as compared to just parentheses, all right? Oh my goodness, if you don't know the answer to that, pay attention. The brackets means that it's non-recoverable depreciation. The parentheses means that it's recoverable depreciation, okay? So if you're gonna build a new fence for someone and you see that under the RCV column is 3106 and you know that it's an RCV policy, everything else is done in RCV, replacement cost value, right? Then you're probably thinking, okay, great, like I can do the job for that 3106. And you're just assuming that this depreciation is recoverable, and so is the client. And so no one knows what the problem is until the very end of the job, and you're trying to collect the next payment, and they're short by $17.98. They're like, well, wait a minute, the insurance company only gave me so much money, and you find out that they're short by that amount, and only to find out that they're supposed to come up with that portion. Okay, so what do you do at that point, right? The client didn't know they were gonna have to come up with $1,800, right? Like they thought it was just their deductible and that was it. And so if you find out late in the game after the job's already done, chances are, just to keep the peace on everything else, you're not going to charge them for that. You're going to take the hit as the contractor. It's happened to me more times than I care to admit, but it's also happened to many, many of my clients that I've consulted through the years. And so I try to school them on that right away. Like if I could do anything, you know, if you see this video, and you saw the little thing about the price list, you see the little nugget about the non-recoverable depreciation. These are two things that I find that people should know that they don't. This will keep you out of trouble. This obviously is, if it's in parentheses, then it's replacement. Now the reason why this is in non-recoverable here, because it's other structures, okay? Now, this is in parentheses, even though it's in the other structures, because it's set at 0. If there was an amount here, it would have a bracket on it. But they're depreciating items that have material for the replacement portion. That's how depreciation works, and they're essentially, you know, based on the values that they've entered in Xactimate, they had to ask someone, or maybe they just assumed on their own, the age of that fence, and based on that value that they inputted, Xactimate decided to depreciate it by, and I said 50%, but it's not 50%, it's another value, but it's $17.98. So I'm not going to go through the math right now. If you keep on moving here, you can see there's the summary for the fence, non-recoverable, staring you in the face. And I've seen that happen so many times we didn't realize that that was non-recoverable. So pay attention to that. Okay, so we've got moving on down, the debris removal. We've got a single axle dump truck, one load, $215.86. Now, you know, if you see that on an estimate, you're thinking to yourself, they're crazy, right? Single axle dump truck for this entire job. We've got roofing and siding and you know, gutters and soffit and fascia. You know, we're definitely going to need more than a single axle dump truck, right? But see, in Xactimate, if you want to really get technical, it says that, you know, for the roofing material, this is where most people get confused, and you may have already heard this from adjusters. Okay, so we go here. Remove the laminated comp shingles with felt. All right, now they could have chose the item that said at the end dash no haul off, right? But if you look at the description for this item, that includes the hauling of that item and the you know, the dumpster, etc. Now you can get more technical. That's if the contractor is using their own equipment. You know, we can get very technical on that, right? But that's essentially it in a nutshell. Is that someone made the incorrect assumption on this job? They're like, okay, well the dumpster's already included for all of the roofing items, right? So I only need a little bit for the rest of it. But it actually only includes the dump and the hauling for the shingles and the felt. Now I'll give you, it also means to include the nails, you know, that the felt was fastened with and that the shingles are fastened with, right? But it does not include the drip edge, the valley, the gutters and downspouts and the side, you know, all the other things, right? The chimney flashing and other items on the roof, all the other types of flashing, all the accessories, you know, it doesn't include any of that. So you have to also, if you're thinking to yourself that the dumpster, well, that includes all the roofing items. No, it doesn't. It just includes the shingles and felt. You need to get the remainder of the roofing items and then everything else on the job. Now, I can see that they're thinking, well, the siding doesn't need to be replaced, just a little bit of repair here and there, so we don't need a lot. That's what they're thinking, but they're still wrong. Even if that was the case, with the roof and the other items on the roof, you would need more than a single axle dump truck. So I rest my case on the dumpster items there. But these items, labor items, or labor minimum items, these items are automatically generated by Xactimate. We've got our running total. Don't forget the non-recoverable depreciation. Okay, so a little summary page here, 29940.60. Move on down to the very end. Once you have the overhead and profit and tax factored in, you have a total that they started out with of 36,602.69, which was severely lacking. And now, let me show you the photos. Okay, so we go into the inspection results folder, and let's look at the drone footage first. We've got the photos. And what I do is I take the photos from videos. That's how I do it. You don't have to do it that way, but I actually make videos with the drone, and then that way I can go back later and find the best spots. I'm thinking about maybe changing that up by using VR, the goggles. I might, I haven't tested it yet, but I'm looking for better ways of doing it because it's very time consuming, but being a practitioner requires putting in the work. So, but anyway, here's the photos of the drone that I took away from the drone video. And remember, this is the front elevation, okay? But the front elevation also includes a garage over here, right? So remember the garage door? And they're giving us a front door and a garage door. So, but remember, they just said a little bit of siding replacement on the front. But let's just start looking at some of the siding just taken from the drone. I mean, it's ripped apart. So your eyes can take you automatically to what's missing. But look down in here. Look at how the rest of the siding looks. I mean, this hurricane in parts had 155-mile-an-hour wind speeds. And what that does to siding and roofing, think about how it's fastened. So the fasteners all throughout the siding have been compromised. Not to mention water getting down behind siding and running on down behind. I mean, you can see like in here, you start to see the edges of water damage. And so water got behind the siding. Here is that shingle type panel siding, and this is the lap siding. Okay, and they're saying that was 8-inch siding, which is not. So there's a wrong item there. And their measurements were sorely off for the front elevation, but there's a lot more damage to the front elevation. But I mean, if you're just going by the pressure cleaning and painting to the front elevation, they were off. And then you go around to the right elevation here, and the right elevation includes this other building back here. And then there's more stuff on the other side. So the two sides, the right and the left, cannot be the same. But here's the rear. So are you saying that this is the rear and this is the rear? Or, but technically this should be the rear and this should be the right, if you're doing it correctly. If you are going to break the elevations apart, differently. But, if you're essentially, let me just tell you, this siding, you've got to have fan fold insulation behind it. And in this particular case, you can see that fan fold insulation is not there. Right, you see the Tyvek wrap right there, but the fan fold insulation is not there. So, to comply with codes, to comply with the International Energy Conservation Code, in this particular case, it's in Florida, and their codes are Florida codes. But it has a foundation. It's based on the International Energy Conservation Code, but is the Florida Energy Conservation, which is as part of the Florida Building Code. But essentially, it's the same and even more restrictive, right? It's the IECC with amendments, but there are required R values, in the walls and the wall cavities, and for that reason, you're going to have fan fold insulation. And then as part of the International Residential Code, part of in this case, the Florida Residential Code, house wrap is going to be required also, right? So that's one of the things you look at is that fan fold insulation is not there, and it's going to have to be there, right? So I mean, if you've got parts of the siding, they're saying that you have to replace, but it's not up to code, then that's a reason why the siding is going to have to be brought up to, why it's going to have to be replaced, is because you're going to have to add fan fold insulation to the entire wall cavity once it's been exposed, okay? In this particular case, it has been exposed, right? The wall cavity has been exposed, and even like as part of the wall sheathing has been opened up and had holes in it and water inside. And then you've got other codes in Florida and in the International Residential Code that there are requirements for wall coverings. So, and that's what this is. It's an exterior wall covering, and you cannot install new siding, wall covering, when the sheathing is wet, is one code, like water soaked. Another one is non-nailable sheathing, like in roofing. So like they say, well, we don't cover rot, or we don't cover that. Well, we're not saying it's rot, we're saying that it's a non-nailable sheathing. Or we're not saying it's rot, but we're saying that, in order to install new wall covering, you must replace the sheathing because it's water soaked. Now, so if you're going to replace that sheathing, you're definitely exposing the wall cavity. There's no way around that, right? And even on their initial estimate, they included, it was kind of like a throwaway, one sheet of sheathing, right? The OSB. Well, I'm like, that's great because you opened the door, you applied coverage at least, so at the very least, you opened the door to the wall cavity, and he had no idea what he was doing, right? But essentially it works like this. He applied coverage to open up the wall cavity for sure, right? So we have to remove the sheathing. Once we've done that, we have opened the wall cavity. Now the energy conservation codes come into play. We've got to bring the R values up in the walls, right? So, and then there's other factors, in Florida, if there's so much of a percent, I think it's 25% of the siding, if it's damaged, must all be replaced. Like there's a lot more restrictive stuff in Florida, but these are kind of the extent of my drone footage, and you would see a lot more photos if we were doing the roof, right? I'd get up on that roof, but again, that roof was already replaced and it was already dealt with. But I did include some of these photos here because so that you can see what the surrounding area looked like. Just so that if they have any questions about, like how damaged those fasteners actually are, just look at the trees. Look how they got just ripped apart and just pushed to one direction. Look at these houses. This is just the direct, neighborhood surrounding the house there. And it's just ripped apart. If the inside desk adjuster is going to review this, if they'd taken that drive that I took on the way out to the house, it was just, oh my goodness, devastation, right? So that should, help firm it up a little bit. But now let me go into some of the other photos. So I've got just the standard photos taken by a camera from the ground level, and I won't take it too far into them because there's a whole bunch of them, but this is more closer up so that we can make, better case right up on it. I usually start by going front, right, rear, left, more of an overview, kind of like the drone did, and then getting more up close footage like this stuff here. But look there, from underneath it, that'll show you the real damage to that siding. Right, so there's no question, and there's that garage portion over there. All that needs replaced, right? All the front elevation needs replaced. There's just no question about it. So this garage area and all of this area, front elevation needs replaced. Move on around to the right elevation. We've got all this, all that. The whole entire thing needs replaced, right? Going around to the rear. Everything, every bit of this siding on every single elevation needs replaced. But when you travel those elevations, go left to right and top to bottom and scour that property with a fine-tooth comb for any scratch of damage. Like that, like a scratch, not that, because you can see that's been previously repaired, but that right there. So there's debris that flies around at 55 mile an hour from all different directions, and it's like missile projectiles, but the screens are damaged. They didn't have screens, and more of the fascia was missed. More damage of the siding up close. Saw fit. Real meticulous and up close photos showing gouges to the siding, even though I know I have it bought, right, with these photos. I also want to show the debris hit photos, right? I want to show damage to the trim, to any part of this job. I mean, it's holes. So I said the walls are already, the wall cavities are already exposed from that. If they're not already exposed by the coverage that they applied. All right, just continue to move on. This is a real good indicator of that water damage that I described. I mean, you really look at the bottom of these, the bottom courses here of the siding, you can see the extent of the water damage beyond damage to the fasteners, beyond projectile debris hits. So what I'm doing is I'm looking for multiple reasons to seal this deal. I want to make sure that there is no question about it, this siding gets approved. And then, you know, I mentioned they missed some pretty minor interior damage. I was surprised that there wasn't more, but they got the roof, you know, replaced pretty quickly, which mitigated that, I'm sure. But there was some water damage, mostly to the sills, which in some of the baseboards, you know, if you have to replace any part of the baseboard, you're gonna damage the paint on the wall, and so you're gonna have to paint the wall, right? And so that was the premise behind the water damage estimate that we ultimately came up with for this year. And I'll cover that and show you, you know, how we interpreted this water damage into our estimate, and then show you what happened after that. But just to go on. Okay, now, so let's get into the next step. We went out, we reviewed the original initial insurance estimate, and we did a very, very, as you can see, detailed inspection, and created an Xactimate estimate. But when we printed it out, we just selected the photo report only, okay? As you can see, this is 172 pages. I'm not going to bore you with going through it because it's just a compilation of all of the photos that I just showed you, okay? Starting with the drone footage and the regular photos. But before getting into that, we did want to establish, like, look, we have to comply with these codes. Like, we have to comply with the 2017 Florida Building Code, residential version, and the energy conservation version, right? And you know, all of those codes supersedes any and all local codes, and those codes are the rules that govern this project. So just dropping them a little hint, like, just so you know, here's the photos for the job, but, you know, a couple things to establish here that we want to bring your attention to is that if we're going to do this job, we're actually going to have to do it and comply with the law, right? And we're not saying that you must pay OL coverage, this and that, right? I'm just saying, hey, if we're doing this job, we, as a contractor, have to comply with the law. And also, if we're doing it, we're going to need overhead and profit for the following reasons, okay? And so kind of giving them a little bit of fire on the opening statement there, right? But as you can see, you know, the remainder of this is essentially the same photos that I showed you. So the remaining 170 pages here are just photos, right? So we took that and we sent it into USAA. And one thing to note about USAA is if you want to send them correspondence, you're going to need a special unique email address, okay? They're kind of different than most insurance companies in that way. You're going to need for them to send to you, if they haven't already sent that to the client, this special email address. And so an easy way to do that is simply call USAA, and you can call them at that number right at the top here. You can just call this number right here. Just call them and just say, hey, my name is Chad with such and such contractors, and we were hired, you know, calling about this claim number, give them the member number and the 3-digit LR number, and give them the address, the client's name and address number and zip code and all that, and then tell them who you are. This is Chad with such and such contractors, and we've been hired as a general contractor to perform all repairs that are prescribed by this claim, and if you could, please send us the special email address so that we can respond to that email address with our estimate. So like, once you have that email address, it's a unique email address that anything you send to that email address will go directly into the claim file. I would start by, after you get that, and they'll send it to you, they'll either read it to you or they'll send you and they'll ask for your email address and they'll send it to you that you can respond to. But once you get it, the first step I would do is send to them a copy of the contract signed with the client that says nothing more than, we agree to hire such and such contractors as our general contractor to perform all repairs that are prescribed by claim number such and such, an insurance company name such and such, for the total value of the replacement cost value approved amount. And that's it, right? No dollar amounts or anything like that, but just that. And really, that contract is that is the most important fundamental thing you'll need on a job like this. If you had them sign that in the beginning, you don't need them to go sign anything else once an approval's come in. Like if this is a contract, the formula sticks all the way through the job. And I'll talk, in other videos more on that, because we can really drill down and make 5-6 videos about that, but this is not the proper forum for that. But that contract, I would start by sending that over to the insurance company, and in this case USAA, because USAA and a whole lot of other insurance like State Farm, MetLife, Chubb, there's a number of different insurance companies where if you send them a copy of your agreement in the very beginning and just let them know that you've been hired, I would tell them, we've been hired as a general contractor. Please at this time release all recoverable depreciation. Now, you've maybe been taught that recoverable depreciation can only be released by the insurance company after the work has been performed. And that is in theory correct, and it is industry standard, but technically, some insurance companies view it being incurred once a contract has been executed by a general, the client and a contractor. So, and there may be some exceptions to that because items like OL items, ordinance and law, code upgrade coverage items, sometimes debris removal, sometimes even O&P can be considered PWI, paid when incurred. So they may still hold back on those items, but generally speaking, across the board, just generally speaking, they will release the recoverable depreciation up front. Now, in this case, they never held back recoverable depreciation to begin with. So that's proof of that, right? So if you go down all the way down to the end here, the only depreciation that they ever held back was the non-recoverable depreciation right here. So they never held it back to begin with. They zeroed out all these items, okay? So that's just one thing to note. Right when you're hired, State Farm, USAA, send them a copy of your contract first step and take the recoverable depreciation money off the table. There's no reason for them to be holding on to that. They're short to begin with, right? But then the next step would be, in this particular case, we use that email address to send to them the photo report, okay? And then they responded back with, hey, please send us an estimate. And so that's what we did next. Okay, so we sent this photo report to USAA, and they got back to us and requested an estimate. And so from there, we even already had it ready. It was just a matter of generating a different report. We generated the Xactimate Estimate. And as you can see, we've redacted out the personal information like we do in all these episodes to protect sensitive information. But at this point, we're into January, and so now we have a January price list, and we have the same opening statement that we had on our photo report. We have the adopted and required building codes here, and the overhead and profit opening statement here. And for more information on the overhead and profit, I'll just cover that briefly here. You can get more info in some of the other videos and extensive info in the IES training course, but essentially it is no longer the rules that they used to use in the past, which was, and these were always unwritten rules as they are today. In the past, they used to use unwritten rules for their standards, which was any 3 trades or more would get you overhead and profit, right? And they've long done away with that, maybe 7-8 years now that they've stopped doing that. I believe it started with State Farm, and then others sort of followed suit once they could see that it was working. But they no longer use that rule, the 3-trade rule, like roofing, gutters, drywall, or roofing, gutters, siding, for example, roofing, gutters, fencing, or any 3 trades. It used to be, and back when I first got in the industry, would get you the 10 and 10 overhead and profit basically automatically, and if they didn't give that to you, you could ask it, based on that as the justification, and you could get it. But somewhere along the line, they started to move these unwritten rules over into a different place. And, if you try to come at them now with that, hey, I've got, 7 trades on the outside, why didn't you give me overhead and profit? They'll respond with something similar to this. Well, it hasn't reached the overall level of complexity and or coordination that's required of a general contractor. And you're like, what? And they're like, well, it hasn't reached the level of overall complexity and or coordination that's required of a general contractor to carry out this job. And so, and it's like, well, what does that mean? And if you can nail them down on it, some of the brighter ones, it essentially means that they believe that you can do everything at the same time with the same people. The trades don't overlap on each other, and most of the time that's just nonsense, right? But that's the logic that they've based this on, and it makes it like a subjective issue, like it's a gray area. It's how do you where is the clear threshold that you cross when it now becomes complex and requires coordination and all that stuff. So you kind of have to, many will tell you, well, hey, the policy includes overhead and profit, and so you tell them that, or have the homeowner sign this letter, that you really wrote for them, or send it to appraisal, or hire a public adjuster, or send it to an attorney. I'm not an advocate of doing it that way, because my lane is to try to, again, exhaust all options that are at the contractor level. And so what I try to do is just the opposite. I try to actually embrace the rules that they've set forth and use their own rules against them. And so in a nutshell, that's sort of what this overhead and profit opening and statement is all about. Is that we are a true general contractor. We've been tasked with performing all tasks in this project. Associated with several trades, this project requires the use of subcontractors. For all of its tasks listed, we coordinate all of these subcontractors and their tasks over the course of many weeks, planning and assessing included. It requires several trips made by many personnel. We finance the cost of this project, order materials, including special order, pick up materials, deliver materials, etc. This project involves many trades and requires extensive coordination, including but not limited to mitigation, contents, cleaning, gutters, painting, mechanical, fencing, drywall, installation, etc. This project also requires extensive interior repairs, and I want to stop there and give some narration on that, or some commentary, if you will. The interior repairs seems to be the new trigger, right? So, like I said, you may have 7 trades that are on the exterior and they don't want to give it to you, they resist, but usually having the interior repairs can be the thing that will automatically trigger the approval for overhead and profit. Now, mind you, back when I was making episode 1 of this hadn't even really been the case yet. But these days, companies like Safeco, Liberty Mutual, and others will maybe give you the overhead and profit, but not approve it for the roofing related items, which is absolutely nuts. It's crazy. But, they've been doing that now for a while, and there's been resistance and things. So we'll see how long it lasts. But they've been doing that for a while. As far as how to get around that, again, that's sort of for a different video and more, let me just finish out this paragraph and I'll continue. But the level of complexity and or coordination, again, their rules, right, required of a general contractor to carry out this project definitely met and exceeded any threshold necessary to obtain overhead and profit. It has been assessed to this project accordingly. Now, that's a great opening statement. I get that, but people ask all the time, hey, if I had that opening statement, then I can get the overhead and profit. That would be assuming that they actually even read it, right? I mean, you have to first assume that they even read the thing. And so I find most of the time they don't read it, but you've got to cover all your bases, cross all your T's, dot all your I's, build up the proper foundation for your estimate, and that's what this is part of. Now, I'm prepared to back that up with extensive documentation, okay? I'm prepared to submit redacted subcontractor invoices if necessary, not showing the totals, but showing that I indeed used subcontractors. I'm prepared to submit detailed logs of each and everything that happened to prove, exactly, complexity and coordination. But I'm going to leave it there because we can really dive down into that rabbit hole and go on forever. But for more on that, see some of the other videos, and for that subject in its completion, along with incredible strategy on how to get it, all the way through with all the details included. That would be in the IES certified training course at iescertified.com. But anyway, moving forward, I'll try not to plug that course. You can tell I'm excited about it, but I'll try not to plug it too much. But it's the hardest thing that I've ever done, putting that course together, and I'm extremely proud of it. I'm excited about it. So are all of the students that are in it. Had incredible feedback lately about how people's businesses are changing and they're making, better money on their jobs. But again, I'm done plugging it, I promise. All right. So I want to cover a little bit more. So you see, typically we have that opening statement on the estimate itself up there, but I've also given an opening statement for the exterior in general, okay, for this particular estimate. And I think you can understand the logic behind that. If we went through and looked at the initial estimate, we looked at the photos, and I think you would agree with me that that estimate was severely lacking. All right, now it's lacking for sure in the funds as far as the total amount, the dollar amount where it should end up. But if you really break it down, we can see that the reason why the dollar amount is so low, the biggest reason is the siding. Right? The siding has not been approved in its entirety. We just look at that initial estimate, and it's essentially just like a basic, repair estimate to various sections of the siding. And so I viewed that as the number one most important reason, the most important factor in this project is getting USAA to approve all of that siding. And I intended to do that, again, without using policy and coverage. And so what I did was I listed out a number of reasons as to why I believe that the siding should be replaced. But I also believe that any one of these items would do it. I think any one of these items would do it, but I want to nail that coffin shut. Like, I want to cut them off at the pass. I want there to be no chance that they're going to let that stand. Like, I want there to be no chance that they're not going to come back and approve this siding in its entirety. And I want to give the inside desk adjuster or the new adjuster who comes out or anybody involved more than enough reason to CYA, to cover themselves, to justify. They can explain to anybody, this is why we did it, okay? So let me just go through it. The original, and I want to see if you agree with me. I'd love to see comments too, by the way. I try to respond to all the comments in the comments section, and I'd love to see, what you think, or maybe you have more ideas about how, more reasoning why we can get this siding approved. But this is what I came up with. The original adjuster's report only indicates that a minimal amount of siding needs to be replaced. The minimal amount specified is not estimated correctly, as the adjuster used the incorrect line items. So that's one problem, right? Nor did the adjuster include code-related items to adjust air leaking, R values of insulation required, flashing, dry sheathing being required, etc. Furthermore, only replacing a minimal amount would not suffice for the following reasons. Number one, all of the siding, so that's 100%, has been extensively damaged by Hurricane Michael. Please see the attached images showing the surrounding neighborhood damaged by extremely high winds. We saw those, right? That's where they come into play. This caused massive damage to the siding fasteners from pulling apart, causing water to get behind the siding, thus completely destroying whatever was not already damaged by wind. See attached photos. Much of the siding has been completely torn off, including the moisture barrier underneath, all the way down to the sheathing, causing further water damage to the sheathing and the interior insulation. Now that's reason number one, is basically the premise there is that, hey, all the siding is 100% damaged. It's direct physical damage. I didn't say direct physical damage, that's policy language, right? But that's what it's getting at, is that it's all damaged due to direct physical damage, right? There's no other tricks you need, okay? That's number one. Number two is, even if we could replace only parts of the siding, the building codes require, and that's the Florida Building Code, see attached codes in the images section, that the underlying sheathing be dry. Much of it was damaged and is water soaked from the hurricane and rain that came after. That was one of the things we covered a little bit earlier in this video, is that the sheathing itself has to be dry per the wall covering building codes. Number 3, even if we could replace only minimal amounts of the siding, the existing siding has been discontinued and is no longer available for purchase. Now, one way you could prove that, and we've covered this in other episodes, is to get an ITEL report. I didn't think in this instance that I needed to get an ITEL report, only because there were so many items we had, but I was prepared to get one if necessary. But honestly, I thought the insurance company should pay for the ITEL on this one. And if they want to still dispute at this point, let them get the ITEL. Incidentally, in case I forget to mention it, later on, the adjuster we met with later on, it did come up. He did ask me if I had it. And I told him exactly what I felt on that. He agreed and didn't think that we needed an ITEL later. More on that later. Okay, so if, the discontinued issue, if the siding's discontinued, right there, that's going to be all you need to get the whole thing bought, as long as you have a minimal amount of damage on each elevation. So typically, in most places, they'll replace it if you have the damage at least on that one elevation, like if a repair would not suffice, but they won't keep going on other elevations unless other codes come into play, such as homeowners association requirements and like the 25% rule I told you about in Florida, other factors, right? But in itself, discontinuation could be the factor that gets the whole thing bought, okay? So now, number 4, even if we could only replace minimal amounts of the siding, and even if it were available for purchase, this siding does not meet current product specifications that are required by building codes and could not be used. Florida Building Code, see attached code. So what we're getting at there is that the codes have been updated and they require more stringent siding specifications. And that's one of the reasons why they don't even make that siding anymore, because it's not up to code, right? You put those two together. Again, that right there is going to be enough. Number 5, even if we could only replace minimal amounts of the siding, and even if it were available for purchase, and even if the existing siding product specifications were acceptable, then the building codes require Florida Energy Conservation Codes, see attached codes in the images section, that the images be installed, or that the insulation, be installed due to the R value requirements for the exterior walls. I believe this one had an R38 requirement. So that's going to be required. You're going to need the fan fold insulation, like I was talking about. We were looking at the pictures, right? And so for all of the above reasons and more, by the way, in case you need more, I'll just keep those in my back pocket. This estimate includes 100% of the siding being removed and replaced, as well as all of the associated components required to complete the project. Case closed. Mic drop, right? And I remember sharing this with the adjuster that came out, and he was flabbergasted. He was happy because he knew he could use this as his justification, which you'll see he did that in a very clear and concise way in his estimate, which you'll see coming up. All right, so front elevation. It's not just remove and replace the siding, okay? So we're going to do the siding, but now we have to do all of the prep work so that we can do the siding. What's in our way? I mean, we've got closed dryer vents, exterior light fixtures, detach reset, and then we've got the soffit. It was damaged. Again, fasteners. Got all the soffit, got all the fascia. In this case, we have that. We have. Let's go look at it. So scroll back on up here. Okay, see, on this siding, you actually have different pieces to it. So the siding field will include basic trim and stuff, but in here you've got custom bent aluminum fascia around the fascia here, and then you've also got hardy type siding fascia or trim in here. So we matched up some of the closest stuff in the estimate with multiple sections of fascia and hardy fascia and such, or the fiber cement fascia. And the adjuster sort of questioned that too, but we explained it with the photos and it made perfect sense to him, as you'll see in his estimate. But anyway, so we're, again, in most of the episodes here, you'll see the way that I write estimates are typically in the order of the job. So you usually see on an insurance adjuster estimate just R&R siding, right? or R&R something, or maybe they forget the R&R and they only it just says siding, like replace only, right? Or drip edge, it'll just say drip edge and doesn't have the R&R. In this case, and in all estimates that I write them in the order of the job. That way, if they're going to dispute those removal items, and we could just take them off, individually. So, but here we go. And also another thing to do is, if you'd like, is to bold. You've seen this in other episodes, is to make all of the supplemental items, the items that are missing from the adjuster estimate or different in some way, make those bold and add a footnote explaining why they're there. Like the items marked in bold indicate items that were missing or different in some way from the initial adjuster report. So, if you'd like to do it that way, I've done that in other episodes as well. And in this case, we have not bolded out the supplemental items. All items are just normal. So we got remove fascia, remove custom fascia, remove gutter, remove siding trim, remove fiber cement lap siding, and then remove the fiber cement shingle type, remove house barrier or the house wrap, remove sheathing. And so we've got these footnotes too. All the siding must be replaced for the reasons explained at the beginning of the exterior section. All of the siding same thing here. And then remove house wrap, remove sheathing, water soaked sheathing. It must be replaced if wet before installing siding, as required by the code. Please see attached. We've got 192 feet of the sheathing being removed and replaced. We have, removed, replaced, and we have the flashing. So try to put like the flashing and window wraps on siding like sandwiched in the middle with the R&R. So we have R&R, the sidewall, end wall flashing. That's where the roof line, meets the wall. Like that's got to be done. And you could have made a case that the roofer should have done it, but he didn't. And if he would have, we would have already been in the siding issue anyway. And by the way, our estimate, again, does not include the roof. So when you see the total that we come up with as compared to their total, just remember, we don't even have the roof on our estimate. If we did, it'd be even much higher. So the sidewall flashing, and now we have the window wraps. So all of the windows on the front elevation, 5, and then an Xactimate also has an option for small windows and large windows. You can make those different if you want. And then the garage door trim. Remember, they had the garage door, and then the door, just a regular door. And then here's another one good for siding is the sill flashing, the moldable tape. That's an energy conservation code, and that's the same thing in other places that aren't Florida. International Energy Conservation Code. It's air seepage, basically. You're required to stop that. So that item right there, you can see adds and it's also required, but it adds quite a bit to the bottom line. And then the house wrap. Now, if they have a lot of windows, you could also put waste onto the house wrap and explain why they did. I could have done it on this one, but I didn't want to go crazy. I just wanted to get it approved and covered. That was my main objective here. And so I didn't want to get too carried away, and I kind of am familiar with USAA and how they do things, so I wanted to keep it as closely in line with how they do things as possible. But then we have the house wrap here, fan fold insulation to replace it. I didn't have it as a removal because it wasn't there, but I do have it as a replacement, and along with the and this is the Xactimate, the Xactware official description for that, and then the replacement for the shingle type siding, and a description for that, also Xactimate, and all of the siding must be replaced for the reasons explained at the beginning of the exterior section. And then I've got the lap siding. Same thing there, and I've got 6-inch, not 8-inch. Siding trim, fiber cement, replace that, description for that. Wrap the custom fascia with aluminum. By the way, that's a great item, all right? I mean, the wrapping if it's custom bent wrapped fascia, don't just put metal fascia. That's what they want to do, and you'll see that, but it's not. It's custom wrapped, right? I remember that adjuster, that's one of the first questions. He goes, "Did you get the custom wrap?" I said, "I sure did." He's paid based on the scale, so he wanted to be able to justify it if he could. He saw that right away. But okay, saw fit, and then paint the siding, because that siding doesn't come painted. It comes primed but not painted. And then the gutter, caulking, and that's also required by code. Okay, so that's the front elevation. Much of the same on the right elevation. I won't go through each and every item because it's mostly the same, but I'll just keep, kind of going through there. I hope that you guys are seeing stuff on the siding estimate that maybe that you're already doing, but that you didn't include on you're not including on your estimates. I mean, these are pretty much automatic, right? Another thing I could have included up in here, and I don't know if I did somewhere on this estimate, is ladder jacks for higher sections. But then you have the rear elevation. We've got some outlets and hose bib, detach and reset. Like all that stuff needs to be dealt with. It all needs to be, you could get, I could even put some plastic on the ground if I wanted to protect surrounding landscape. And there's other things, to be clear, that I can add on this estimate. But I like to keep some things in my back pocket. That way, if they try to get too crazy with me and they want to knock me down, maybe I have to come to a point, in those conversations with the insurance company where I say, okay, yeah, you're right. I see a lot of things that are incorrect here. We just need to go back and hit the reset button and do it all over again, because I'm seeing a lot of items that I missed out of this estimate. So I like to keep some things in my back pocket for strategic purposes. But left elevation, I don't see a whole lot of difference. There was more sheathing over on that side. Not a whole lot of differences there. Mostly the same, right? And you're coming down to the end of the elevations. And then we get into the fencing. And I don't mark anything about depreciation on my estimates. I don't think the contractor really needs to mark that, or deductibles. Let them make those applications and deductions. But the ornamental fencing, we've got, I do want to cover one other thing. There's a trick in this estimate that's built in. And let me explain why, because it did come into play. In this estimate, for removal items, if you're familiar with Xactimate on any level, when you're removing items, and for most items in roofing, for example, you're removing the items, it's going to set the category, and I get into this in some of the other videos, and you may have heard, for the type of work that you're performing as demolition, DMO. You may have heard of DMO versus RFG, that's demolition versus roofing. So like removal of drip edge, the category that they're going to use for that one item, okay, and that's another reason why I break these line items apart. The category for that one item is set by default at DMO. And that's incorrect, because most people aren't going to use a separate demolition crew, like a general labor crew, to come out and do the demo. They're going to use the siding crew to do that, right? And so that trade, if it was correct and accurate, should be set at SDG, siding, right? If you're doing fascia and things like this, it's SFG, it's soffit, fascia, and gutters. So you're not using demolition for the removal of most of these items, okay? So one way to do it is if you go and you add the line item and it's set at R&R, you look at the unit price portion of that line item and you'll see what it's already set as. It should say SDG for the replacement portion and DMO for the removal. And then you can go and change that DMO portion to match the replacement. And so every single removal item in this estimate has been priced accordingly. Okay, and it's a big, huge difference. It is a big, big difference. The way that they try to get over on you for doing that's a big difference. Now, I used to do these in the sense that I would put a detailed footnotes saying, hey, this was priced with RFG, and that's the correct way of doing it because Xactimate's wrong, right? And all that was doing was alerting them to the fact that I did it, and almost every time they'd say, nope, sorry, we don't pay for that. We don't do it that way, right? And so here's where the strategy comes in. You don't know if they're going to come out and write their own estimate or not, okay? Sometimes you do. Like if it's State Farm, they're going to write their own estimate. USAA, they're going to write their own estimate. But USAA might be willing to accept your ESX data file that they will use to plug into their estimate, and they'll just make that estimate their own. So in other words, if they go through that process, or if they're not required to write their own estimate, in other words, they're just going to go off of your estimate, then my friends, they're never going to catch it, okay? So you may have seen a lot of different advice on this RFG versus, or this DMO versus whatever. I changed the DMO off of drywall, carpentry, sheathing, the siding, every trade, not just RFG, not just roofing. I do it on everything. And I've seen some really, excellent advice on that out there, but I think most of it's getting to be obsolete because the insurance companies are catching up to that. And so I've had to change my tactics, throughout the past couple of years as this has become more and more popular. But that's how I do it. I try to sneak it in through the back door. And on this one, it actually worked, okay? So I'll explain that, but that's why it's something that's actually not successful that often, okay? So you might then say, well, why should I even bother with putting it in the estimate? And the reason why you should is for examples and scenarios just like this real life scenario where it worked and we got paid for it, okay? So I'll explain more as we go through the revised adjuster estimate, which is coming up here just shortly. I just want to go through the bedroom, some of the interior work here, which they had, again, was missing minor stuff. Bedroom 1, contents move out then reset, mask and cover the floor, mask and tape along where the walls meet the ceiling because we're not doing anything to the ceilings. And, you can mask and tape along the baseboard and other areas too. You can mask along the windows and doors. Again, it depends on, do you want to get real technical now, or do you want to hold some things in your back pocket? Window drapery hardware, detach reset, blinds, detach reset. Okay, R&R baseboard, 3.5 or 3.25 hardwood, 6 linear feet of that. A little bit of drywall, 4 feet. A little bit of the windowsill, a little bit of insulation. Apply antimicrobial agent to the surface area. Prime the new drywall. Paint all the walls in the room, okay? And that's going to come into play when we get into the adjuster's version, but that's my version. Paint all the walls in the room, 2 coats, 2 colors. And I start there because it is technically 2 colors, and I want 2 coats because it is colored. You never know how many coats you're really going to need. And maybe they back me down and say, 1 coat, right? Because they started with 1 coat on the outside. I noticed that, right? I mean, so there's things you got to, I want to start high and let them back me back down if necessary. And then let's say they do that. Let's say they say, no, we don't think it's going to need 2 coats. We're just going to pay you for 1. Say, okay, well, listen, I'm going to agree to do it your way. I'm going to try to do it your way as long as so I'll withhold that from the estimate at this point, as long as you're willing to revisit this issue when it's no longer a hypothetical. Because right now it's just a hypothetical scenario. Like, we haven't actually started to swing hammers and show up and do actual work when it's actually incurred. So we're willing to withhold it now when it's just a hypothetical, theoretical type situation, as long as you're willing to revisit this issue when it's no longer a hypothetical and it's an actual reality. Fair enough? It is? Okay, great. Would you mind notating that to the claim file? Right? You could carry that even further. But, so I'm not going to go through in depth on the rest of the rooms because it's mainly the same thing. A little bit of water came through the windows and did a little bit of damage to the drywall and the baseboard. And now all the walls need to be painted because if you're going to remove baseboard, any piece of baseboard from any wall, then you're going to damage the paint to the wall and you now have to repaint the wall. But not just one wall, all the walls, wherever they lead in a continuous run. Master bedroom, same thing. Office, same thing. Living room, same things, a little bit bigger of a space here. And general conditions, my version is 1 large dumpster. Start big and let them back me down if necessary. All right, and we have the labor minimums that basically automatically get generated by Xactimate. And then we go on down and you can see that the grand total, my version with overhead and profit and everything, without the roof, remember, without the roof, is $88,426.79, right? Now, so going back to where they were at, like their final version, just to refresh your memory, was $36,602.69. So we're a long way off, that's why I didn't opt to go ahead and just nail them with the estimate right off the bat. Like, I wanted to inch my way there piece by piece, send them the photo report. Then they said, send us the estimate. send them the estimate, and then what they say, okay, we're sending the adjuster, which in my mind, they have everything they need with this report to justify making all of these approvals right from where they sit. I mean, all the data that they have, from me and from the original adjuster, from things like Eagle View, right? I mean, there's plenty enough information to justify them just approving it right from where they sit. I mean, they've also got all the building code information that they could possibly need to approve this job. I gave them way more than necessary information that they could possibly need. I mean, anything that they could need to approve this is here. Sidewall flashing, the building thermal envelope. I've got everything along with all of the images in here. Everything that they need to justify approving this right from where they sit. But they're not going to do that. And I had an inkling that they probably wouldn't, and it's because of that major difference. Like, no inside adjuster wants to put that on themselves and I've seen it happen plenty of times, but it's not typical, okay? Like, they're going to make sure that they send out a separate adjuster who's going to accept responsibility for it, and they could do so by putting their eyes on it, right? And so that's what they did. In this scenario, you can then assume that the new adjuster is going to contact the property owner first. And you can instruct the property owner, make sure you don't set that appointment without me being there, right? Because you want to be included in all of that. You got to really coach them up on that. Because the trick that the adjusters like to do is to kind of sneak in without you there and see if they can sort of settle in on their own. But you really need to be there. It's a big waste of time because ultimately later on they're going to have to come back and deal with it, right? So you're at the new adjuster, you try to make sure that you're at that appointment. Okay, now you can assume that the adjuster is going to have a copy of this estimate that you've sent, but what I find is most of these adjusters, they either don't have it or they have access to it. They could get it if they needed to, but they're not interested in looking at it. Like, they want to do their own estimate. And so that's what happened here. A guy came out, he was from Louisiana. I met him out there. Everybody was there. And essentially, he wanted to have a fresh look at this thing on his own. And I told him, I said, look, we're the contractor that's been hired. We're hired to perform all the repairs that have been prescribed by this claim or gets prescribed by this claim. And so I'm not here to tell you how to do your job, but I'm here to find out what job I'm supposed to do, to find out what's been, approved and what is prescribed. And he goes, well, do you have an estimate? I go, well, I've been building an estimate. I've got one that's the basic framework that's in place, but I don't have it ready for you because I don't know what it is that's approved. But I'm happy to share with you what I do have. I'd like to know, are you going to have to do your own estimate? And then he went right into, because I want to know, will they accept my ESX? I'd rather not show my cards. I want to see their cards first, right? And so I might show him my cards if he commits to using my ESX. Well, he committed because he asked me. He goes, hey, can you just give me your ESX file? And I said, well, sure. So now that I know he's going to commit to that, I want to see what he thinks about my estimate. So I pull up the PDF version and I start to show him everything. And I showed him about my reasoning for the siding. And, I go around, I said, you got to look at the siding. We go around and I'm reading through these reasonings as we're looking at the siding. I mean, we're looking at the items as we're looking at the siding. There's no better way to really do that, to clear it. I mean, for sure, he can see with his own eyes that these items were justified. And so, he did a detailed inspection. We did an inspection together of the interior, and he even added on a couple new rooms because more damage had showed itself since my inspection. So he added a couple new rooms to his. But his take was that we're not going to paint all the walls in the room. We're just going to paint the one wall that's affected. And I have seen insurance companies doing that now and again. And I told him, that's okay. Write it up for what you have to do. No argument. I want to, keep a friend and keep good rapport with him throughout. Push him as far as I can, but gently, and to where he comes to a stopping point. Well, hey, I wouldn't want you to put that on there if it's going to get kicked back, right? That wouldn't help any of us. So for sure, if that's what you think, just write it up that way. If that's how they told you to do it. But just so you know, I'm probably going to supplement it later with the inside team, and I'm probably going to let them know that we couldn't just do one wall. And he goes, oh, that's fine. I don't have any problem with that. But that's my strategy, right? I'm going to take it as far as I can. And if he's willing to pay for the painting, hey, I've won because he's applied coverage, right? He's opened up the coverage for all that interior work. It should have been done the first time, but he's doing it now. So now I can go back and get USAA to pay for the painting of the remainder of those rooms real easy. They'll probably do that without having to send another adjuster later. Okay, so now let's look at, I sent him my ESX file, and a couple of days later, like he asked me via text a couple questions here and there to justify a couple things. It's mostly measurement related, but we got into the double trim and fascia area. He didn't want that to look like it was double dipping, but I think he agreed with my justification. But let's look at it. So here is the next version of the USAA adjuster estimate that came as a result of that re-inspect meeting. So now we have, it is a new January 19th price list. And a little confusing because he's just showing at the front what it was to begin with, right? Because initially I'm like, well, what did he add to it? He didn't add anything. But that's just, he's showing the initial, and then he's going through the other structures with prior payments, and then he's going through building code. And look how he wrote this up. So he's getting the siding bought, and I don't know if he did this or if this decision was made later on, but to end the suspense, they approved all of the siding, right? But they approved it based on building code upgrades, so O and L. And so they included this whole other section for building code, 68,52513, right? And let's just keep going. Okay, so then he gets into the roof, and again, that doesn't concern us, but hey, he knew the problem that existed. He did get it up a little bit with just the price list increase, right? But the office, you can see, he agreed to all the same things. Everything essentially looks the same except for just wants to paint the one wall. But 2 coats, 2 colors, he agreed with that. I really like this adjuster a lot. Like, he and I got along very, very good. Multiple times he showed me mad respect for my professionalism and for being this prepared. And he said in one of his emails, he said, I appreciate your dedication. So we had a good working relationship from the get-go. It's a very easy day at the office on this one for me. But everything else, master bath, living room, everything that we saw before, right? Added, like I mentioned, a couple additional rooms into the mix. But the spare room, I think, was one of those additional rooms. And look at this. This is what I wanted to show you. We're looking at this man's estimate. And so to get it bought, he had to have reasoning to get it bought. And look at the reasoning that he uses to get it bought. And where does that come from? Just to refresh your memory, right? Like, we're going to go back to the beginning of my exterior estimate. Sure looks familiar to me. So I was pretty flattered and proud of that reasoning. He thought it was so good. And he laughed as we were looking through. He's like, man, you really did nail this shut. But as you can see, he approved everything. And he went along and used my footnotes. So he just plugged in my estimate, the ESX data file, into his Xactimate. He made a couple little changes here and there, but ultimately he approved everything the way that it stood. So he was able to look, good by changing a couple little things, making it like he was doing his job and keeping me honest. But who was keeping who honest here? Was it him keeping me honest or me keeping USAA honest? So, all right, other structures, ornamental fencing, and debris removal. Look, he gave us 2 dumpsters. He pumped it up. And you can see at the end of the day, final approval, $110,496.45. Again, that includes the roof, so we need to take off $21,000, and they did not give overhead and profit on the roofing portion. But so you just essentially take off $21,000 from that, and you're at like 89, just short of $89,000. And so, quick recap, they started at $36,602.69, including the roof. We wrote an estimate for $88,426.79, not including the roof. And that's about what they approved, just short of $89,000, maybe a little bit more than what we submitted, because they approved with the roof a grand total of $110,496.45. Take off the roof, they're about $88,000, $89,000. So this one was a big win, major success. This is what I call winning in this game. So again, do not just take the insurance company's word for it. I mean, can you imagine if my client, the contractor, went to try to do this job for $36,000 minus the $19,000 that they had for the roof? So he was going to do all of this work and just do simple little repairs and patch jobs and all of that. I mean, that's just crazy. You've got to keep the insurance adjusters honest, because if you don't, I'm finding that nobody else is going to do it. And maybe some of the other solutions out there where people are going to utilize to do that, to keep the insurance companies honest, such as appraisals and attorneys and public adjusters, those folks are great and they have their place in this industry. But I can tell you, it takes a long time, right? It takes a long time. So we wrote our estimate. You know, this was a 2-week process, start to finish. From the time that we submitted the photo report, the next day they wanted the estimate sent to them. The next week we were out there with a new adjuster. 2 days later, we had a revised estimate. The payment was in the mail to the client. So that is exceptional. It's incredible. I mean, it's phenomenal to be able to do that inside of 2 weeks, to go from 36 grand to 110 grand, inside of 2 weeks. That's what I call winning in this game. Thank you for watching another episode of What's Wrong with This Insurance Estimate, episode number 8. Stay tuned for another episode of What's Wrong with This Insurance Estimate with episode number 9. Keep winning, my friends, and keep grinding.